Good morning. It's Jeffrey Christian of CPM Group. It's just after 10 o'clock on Friday, the 18th of August here in New York. Gold's trading around 1925. Silver is around 2285, trying to get back over 23. Platinum and palladium are up, and the stock market's showing a little bit of weakness at current levels. I want to talk today about current gold investment demand conditions. It's really investment demand that determines prices, and I want to go through where we are in the middle of August related to that. It's interesting right now because seeing some of the things that we see in the market, there's a palpable, quantifiable increase in the scrutiny that investors and mining executives and regulators and others are taking toward, especially gold and silver markets right now, but physical markets, which are relatively under-regulated compared to stocks and bonds and futures and exchange-traded options. And we've seen this before, where there are periods of time when people start questioning the veracity and the honesty of purveyors of precious metals sales outlets to retailers and people who promote that. Related to that, and before I get into investment demand, I wanted to talk a little bit about next week. It's going to be an interesting week. The BRICS nations are going to have their 15th Head of State Summit in Joburg or in South Africa. It may be in Pretoria or Cape Town, I don't know. But it's going to be in South Africa on the 22nd and 24th of August. And it's not going to yield much in the minds of what we expect and in the minds of what lawyers would call reasonable people. Putin isn't even going to attend. He's afraid that he might be arrested for war crimes if he shows up. And he also doesn't like being in crowds of people. So he has been touting this idea of a gold-backed trading currency. No one else in any of the BRICS nations, Brazil, even in Russia, India, China, South Africa, are interested in having a gold-backed currency. It doesn't make sense to them. The subject will probably be mentioned in passing, but over those 3 days, there are a bunch of other things that will be much more important in the minds of people. And one of the issues is the changing nature of the international currency regime and international trading patterns. You have seen a continuation and an acceleration of decades-long pattern of trying to use currencies other than the U.S. dollar for international trade settlements. International trade settlements, both for goods and for services, still about 90% of them are settled, paid for in the dollar. And from a long-term perspective, a lot of people would like to see that change, but over the last 3 decades, it hasn't. Also next week is the Kansas City Fed's Jackson Hole Summit, annual summit, 24th through 26th. I call it a barbecue because that's what it really started off as. This year, the topic is going to be structural shifts in the global economy, which sort of should suggest to reasonable people that the economists and bankers at the Federal Reserve System and other people in mainstream financial markets and banking markets, banking industry, are aware that there are structural shifts going on in the global economy. They always are. We've gone through a lot of them in the 80s and 90s into the aughties, and there'll be another continuation of that. But they're going to be talking about that. And it's kind of funny. I want you to remember, it used to be that gold and silver promoters would go on and on and on about the importance of monetary authorities and others attending the Kansas City Fed's Jackson Hole event. Oh, this is where they got together and plotted to take over the world. It was like the Bilderberg golf outing. Yeah. Oh, yeah. This is where wealthy people, intelligent people, powerful people get together and they play golf. And then over dinner, they say, "So, what do you think about the state of the world?" And they appointed a few people to give little talks to sort of promote a dialogue about where they see it going. Sort of the way I do it on my stoop in New York City with my neighbors, and other people do it on their patios around the world. Nothing more, nothing less. But it used to be a big focal point, and this year these guys aren't even mentioning it because they're focusing on a gold-backed currency and de-dollarization, and what great announcement that they're going to stop using the dollar next week at the BRICS conference. Not going to happen. Do you remember the silver squeeze that was going to push silver prices over $100 in 2021? And it didn't happen. Do you remember the Great Reset in 2022? Which didn't happen. Now it's dollar de-dollarization and a gold-backed currency, which you shouldn't really expect to happen. It's sort of like there are groups in American politics that say, oh, we have to protect the sanctity of heterosexual marriage by outlawing homosexual marriage. You know, great New Yorker cartoon. It's like not gay marriage that's threatening my marriage. It's the blonde he's sleeping with. And then it was, oh, all these illegal immigrants are going to be taking away. They're going to be competing for my job. You know, poor people with nothing but the clothes on their back who don't even speak English, who have walked 3,000 miles to get away from murdering drug cartels that run their country, are going to cross the border and take your job. Not sure what job you have, but you might want to go back to community college or university and get some more education and look for a different job. There's a lot of hype. There always will be a lot of hype. And it's going to be an interesting week. Looking forward to next Friday's call video. So let's talk, well, one last thing. Yeah, de-dollarization. You can see that the percentage of central bank monetary reserves held in dollars has been pretty stable, at least since 1995. But actually, you can go back even further, and it was more. It was larger than this. But it's been pretty stable for the last 30 years. There was a little bit blip up when we went to the euro, and central banks had to get rid of their currencies that were denominated in currencies that were going to disappear on January 1st, 1999, because the countries were adopting the euro as their currency. And you saw that the percentage of monetary reserves go up to about 72%. And then it came back down, and it's been about 58 to 62% ever since that and before that. So imminent de-dollarization is just marketing nonsense. Trying to scare people, you got to get into dollars, you got to get into gold and silver because they're going to take your currency away. Ignore it. Now, let's talk about gold investment demand. This is a chart that shows net investment demand, not gross investment demand, net investment demand globally for physical gold each year going back to 1966. The dark bars are years pretty much, there's one that fell below it, where investors were buying more than 20 million ounces net. And that tends to correspond with rising prices. The lighter blue bars are years when they bought less than 20 million ounces, and that tends to correspond with lower or flat prices for gold. All of which tells you it's investment demand and the levels and trends in investment demand that determine the price of gold. If you have high or rising investment demand for physical gold, it tends to push the price higher. And if you have lower, it tends to push allow the price to decline. We saw 2018, 2019, less than 20 million ounces of gold being purchased. And the price of gold was starting to rise. In 2020, with the lockdown and the pandemic, investors' demand for Physical gold surged to 40 million ounces, and the price of gold rose to a record level. Things got better in 2021, and they bought less gold, but it was still over 20 million ounces. And the price of gold kind of moved slightly higher. 2022, they bought a little bit more gold, but it was still about 25, 26 million ounces, and the price went a little higher. The average price in 2021 was $1,799. In 2022, the price was $1,804 on average. And in both years, you saw spikes early in the year and then lower prices later in the year. This year, we'll probably have an annual price somewhere north of 1,900. CPM Group is predicting a significantly higher than 1,900 price for gold for 2023. And you can see that investment demand is inching up, but it's still around 26, 27, 28 million ounces. So investors are buying enough gold to support current prices, which are record levels, but they're not buying 40 million ounces or even 30 million ounces. They're not buying enough gold on a net basis to push prices even higher. And I put the word up there yet, because we do think that probably starting in the fourth quarter of this year, but going into 2024, 2025, we'll see more hostile economic conditions, and we'll see investment demand continue to rise and push the gold price higher. But this is the bottom line. This is the bottom line for gold. Physical net investment demand for gold. And you can see it's high enough to keep prices at record levels, but it's not pushing the price higher. And my other charts basically all support that. Gold ETFs, they're off year to date. There has been a shift to the larger funds over smaller funds. That seems to be over for now. If you look at the most recent data that we published, all of these charts are from our the first chart is from our gold yearbook. The other charts and tables here that I'm showing you are from our August 3rd Precious Metals Advisory. Earlier in the year, you were seeing declines in total ETF holdings, but rising levels of gold held by the top 5 ETFs. What you were seeing were investors shifting, some investors were selling their gold, but other investors were saying, I still want to own gold, but I want it held in a larger ETF run by a larger financial institution, as opposed to a smaller ETF run by a smaller financial institution. That's kind of past. And what we saw in July was that total ETF holdings declined 1.1 million ounces in July alone. And gold held by the top 5 funds actually fell 490 million ounces, 490,000 ounces. So a significant portion of the holdings that were sold in July actually were coming out of those 5 larger companies. So the shift to larger funds seems to be over, at least for now. We think it'll come back because we think that the economic uncertainties and financial market instabilities that cause investors to be making that shift will come back to investors' attention soon. We think it'll happen. But you're seeing overall investors selling some of their ETFs. And year to date, they've sold about 2.4 million ounces. Coins, U.S. Mint coins. The U.S. Mint is the only national mint that publishes monthly sales coins. They're off about 4% year to date. You can see, early 2022, Russian invasion of Ukraine, etc. You saw an extended period of time with very high levels. That started to dissipate toward the end of last year as the gold price fell, but it was still relatively high. We saw, again, a first quarter surge into April, relatively strong demand. And then the last couple of months, we've seen lower demand for gold eagles. So it's something to watch out for, but it's an indication. Investors are still buying gold on a net basis, but they're buying less gold, and they're being more cautious. And non-commercial investors, these are largely institutional investors, but it's anybody that has a large position that's not a commercial entity on the Comex gold futures and options markets. They remain realistically bullish. They're not as bullish as they were at earlier periods, 2020, 2019, when their gross longs are up around 45 million ounces at points. But they're still around 18 to 20 million ounces, 15 to 20 million ounces on a net basis, and about 25 to 30 million ounces on a gross basis. So institutional investors that are shorter term oriented, looking at futures and options, remain bullish in a realistic level. These aren't people necessarily thinking that the price is going to 10,000, but they make a quantitative and qualitative guess as to whether they think the price is going to be higher or lower over the next 3 months, 6 months, and they take futures and options positions accordingly. So investment demand's there. It's relatively strong. It's not pushing the price higher, but it's definitely keeping the price from falling. That's all I have for now. Have a good weekend. Take care of yourself. I'm tempted to say that if all of this information that I gave you, if the most significant thing that you take away from this video today is that I got my hair cut, you probably should check yourself into a monastery and then look into getting some continuing education, because there's a lot more important things than my hair that you should be commenting on, at least to yourself. You don't really need to comment to us unless you feel compelled to, but my hair is probably the least important thing. In the meantime, take care of yourself and those around you. See what you can do to help the world. It definitely needs help. We're seeing problems all around the world. And, there's a saying that God and godliness occur in places of suffering. There's a lot of suffering out there. And you don't have to believe in God, but you might want to say, I want to do unto others as they would do unto me, and I want to be helpful to others and to the world at large. And the world at large really needs our help right now. There's just so many bad things happening. Take care of yourself in that environment. Take care of others around you. Have a good weekend, and we'll talk next week.